correct way to draw zones. In order to draw a supply zone, position a horizontal line below the candle bodies. This will serve as your sell entry point. Then draw a line across the highest candle wick. Your stop loss will go a few pips above this point. The opposite is true of a demand zone. Draw the top line, your entry, against the candle bodies. Draw the bottom line below the candle wicks. Your stop loss will be a pip or two below this line. The last two slides were perfect examples, but what if your zone looks like this? In this case, we didn't have a perfect line of candles to draw the top of the zone. What we do is draw a line where price took off quickly and didn't look back. There should be little or no retracements. Here's another example with a very subtle difference. The circled wick is a retracement on a lower time frame. It didn't actually shoot up until it passed the orange line. If you drill down the time frames, there would be a bunch of down and up candles where the wick is. So you could have an order to buy at the orange line, but there is nothing wrong with having an order at the yellow line either. It all depends on your risk, which we will cover later. Sometimes price will bounce exactly where you think, other times you'll miss the trade, and sometimes it will bounce deep into a zone. So trading is more an art than a science. And finally in this section, a quick note about zooming out for the bigger view. Always zoom out when looking at charts. It's amazing how many traders look at a letterbox view of their charts and can't see the world around. Read it like a map. So in this chart, we don't get many clues as to where price has been, where the support resistance levels are, and the supply and demand zones. It's a letterbox view, but this chart is a wider view. It's been zoomed out. You can barely see the candles, but you can pick out all the supply and demand zones, all the support and resistance levels. This is what we want to look at. Time to review what we've done so far. We've covered the basics, and you should now be able to understand, identify and draw support and resistance, recognise and draw trend lines, bull and bear channels, know the difference between bearish reversal, bearish continuation and bullish continuation, draw supply and demand zones, and additionally know where to place your stop loss. It takes time to train your eye to recognise these patterns, so don't worry if they are hard to see on the real chart at first. Just keep practicing. Okay, if you're ready, let's move on to the next section.